Now speaking, Randy Geiler, Vice President, Investor Relations. Dollar Tree's fiscal 2023 first quarter results were discussed in today's call. Chairman and CEO Rick Dreiling and CFO Jeff Davis were present to provide insights. Forward-looking statements were made about expectations, plans, and prospects for the company, which are subject to risks and uncertainties. A Form 10-K was filed on March 10, 2023, a Form 10-Q for the most recently ended fiscal quarter, and a press release and Form 8-K were also referenced. Non-GAAP financial measures were discussed during the call, with GAAP results as the basis of comparison. First quarter comparisons for fiscal 2023 were made against the same period a year ago. A supplemental slide deck featuring key operating metrics is available online. Questions were limited to one per person. Now speaking, Rick Dreiling, Chairman and Chief Executive Officer. Dollar Tree is hosting its investor conference in 4 weeks on June 21 in Norfolk, Virginia near their corporate headquarters. They reported $7.32 billion in sales and operating income of $419.7 million with EPS of $1.35 and adjusted EPS of $1.47. Dollar Tree's comparable traffic count increased by 5.5%, while Family Dollar's comp traffic was up 4.3%. Dollar Tree continues to add $3 and $5 plus items to 1,800 stores this year, while Family Dollar plans to add 16,000 new cooler doors in 2023. Overall, they remain confident in their outlook for the business and continued sales momentum. Now speaking, Jeff Davis, Chief Financial Officer. Dollar Tree and Family Dollar segments experienced strong top-line performance in Q1 2023, with total sales increasing 6.1% to $7.3 billion based on comp store sales growth of 4.8%. Traffic increased 5%, average ticket was down slightly, and the sales mix of consumables increased 200 basis points. Operating income decreased 43%, adjusted operating income decreased 39% due to a $30 million accrual related to legal proceedings. Gross profit decreased 4.7%, gross margin contracted 340 basis points. SG&A as a percentage of revenue increased 150 basis points. Net income was $299 million. EPS was $1.35 compared to $2.37 a year ago. Adjusted net income was $325.1 million, and adjusted EPS was $1.47. Inventory increased 6.5%. Capital expenditures were $350.4 million versus $253.4 million. Cash and cash equivalents totaled $872.8 million. Free cash flow improved to $402 million from $285 million last year. Effective tax rate was 24.1% versus 23.1% last year. And the company expects diluted EPS for the second quarter to be in the range of 79 cents to 89 cents. For full year fiscal 2023, consolidated sales are expected to range from $30 billion to $30.5 billion with a low to mid-single-digit comparable store sales increase. Selling square footage is expected to grow by 3% to 3.5%, and diluted GAAP EPS outlook is revised to a range of $5.73 to $6.13. Now speaking, Rick Dreiling, Chairman and Chief Executive Officer. We are executing at a high level and acting with urgency to transform our business, starting off 2023 well. At our upcoming investor conference next month, we plan to provide a multi-year outlook for the business, including key elements of our growth strategy. We have identified multiple levers to unlock value and underlying business momentum that positions us favorably in the current retail and economic environment, expecting greater earnings power over the next 3 years. We welcomed Mike Kindy as new Supply Chain Officer, a proven subject matter expert and thought leader in supply chain and logistics. John Flanagan was thanked for his contributions, which helped lead to our current success. Our efforts so far have led to significant market share gains across both segments, with a clear runway to increase productivity and profitability. We have a team of over 200,000 motivated associates ready to succeed and will be sharing more details at the conference. Bob LaFleur also recently joined Dollar Tree as the new SVP of Investor Relations, succeeding Randy Geiler, who will be retiring this June after 9 years with the company. Guggenheim Partners analyst John Heinbockel inquired, "Do you think that the consumable penetration will remain elevated over time, and what strategies can be used to mitigate the impact of mix on margin? Can private label help, and is there an opportunity for a DG Fresh-like distribution initiative to reduce COGS?" Rick Dreiling replied, "I answered a question about our strength in consumables and how it has nothing to do with weakness in our discretionary products. We are introducing consumable products that the consumer is responding to, which have higher value than those found at other retailers. Our private brand efforts include HBC and higher margin private label items to accelerate the margin. Shrink is cyclical and we are keeping an eye on it, with 4 classes of shrink stores, each having uniform shrink impact. Lastly, we are committed to frozen food and refrigerated foods, which is a rapidly growing category. Morgan Stanley analyst Simeon Gutman inquired, have Dollar Tree Plus and the $1.25 price point been affected by higher cost pressures and margin headwinds? How is the consumer reacting to these changes, and how will this affect the accelerated rollout of Dollar Tree Plus to more stores? Rick Dreiling replied, Dollar Tree Plus and $3, $4, $5 frozen food initiatives are being implemented quickly. Chief Merchant Rick McNeely is testing more price points in certain stores without consumer resistance. The team is focused on providing more value at every price point while still maintaining price separation from competitors. Wells Fargo Securities analyst Edward Kelly inquired, can you walk us through why shrink decreased and when can we expect to see a significant increase in earnings? Jeff Davis replied, Jeff reported that, when the year started, 10% of stores had taken inventory, however due to a rapid increase in shrink, only 40% of stores have taken inventory. An adjustment was made to reflect the potential further increase in shrink, which is similar to what other retailers across the industry are experiencing due to societal and economic factors. Steps are being taken to mitigate and control this increase. Rick Dreiling replied, I am very bullish on the opportunity here and believe the current consumable shift and shrink impact are transitory. I am confident in our progress, including the move to a 70-inch profile, implementation of 1,000 new SKUs, expanded coolers and expanded frozen food, improved physical store facilities, reduced turnover through wage investments, and Dollar Tree Plus. My optimism will be further highlighted at the Investor Day. Rick Dreiling replied. Truist Securities analyst Scott Ciccarelli inquired, have you seen any success in shifting consumers back to discretionary purchases as consumer behavior stabilizes, similar to Dollar General's experience during the Great Recession? Their consumable sales spiked during that time, yet consumables have continued to make up a larger portion of their sales every year up until the pandemic. Rick Dreiling replied, I'm emphasizing the importance of providing value to the consumer, not just cheap products. To do this, Dollar Tree is taking their first trip to China in over 3 years to better procure products and bring the right selection into our stores. The consumer will be able to see, hold, and feel what they're buying, and make the choice of what provides value to them. Piper Sandler analyst Peter Keith inquired, have the transaction comps resulted in more customers coming into stores, and if so, is it repeat behavior or new customers? Rick Dreiling replied, we are seeing new customers and our loyal customers are coming more frequently. However, they're not spending more money when they come. We are targeting a lower-income consumer, $80,000, and focusing on consumable goods. We have improved our service level to the stores in order to give them what they want when they order it. As a result of this, we have seen a growth in consumption rate from this demographic and an improvement in stock. Jeff Davis replied, I'm averaging 3 million net new customers over the last 12 months. Customers are shopping across both banners and making purchases from both consumables and discretionary items. To ensure they return to our stores, I'm continuing to make improvements to store standards, delivery and service. Credit Suisse analyst Karen Short inquired, can you provide an update on the overall margin structure within the Dollar Tree banner, particularly in regards to freight and the test to consolidate a distribution center? Is there a mix shift that will be more impactfully realized in the second half of the year? Jeff Davis replied, Dollar Tree expects to manage its gross margin rate at the lower end of the 36 to 37% range for the year. This is due to product costs, shrink, markdowns and other elements. Dollar Tree believes it can continue managing the business and maintain this range through the introduction of new price points and capturing more margin at lower prices. Rick Dreiling replied, we are in the process of building a new combined warehouse in Florida, while we converted our existing one in Utah to a Family Dollar only. John and Mike have done an analysis of the system, looking at stem miles and how far away the distribution center is from the stores. We will provide more information on this at the investor conference and hope to have an answer in the next 6 to 7 months. J.P. Morgan Chase & Company analyst Matt Boss inquired, have Dollar Tree seen an increase in traffic, but a decrease in the average ticket size? What recent trends support the sequential comp acceleration that was forecasted for the second quarter? Rick Dreiling replied, I am pleased with the current trends of the quarter only 3.5 weeks in, as I see that transaction growth is driving comp sales at Dollar Tree. I remain very bullish on both banners. Telsey Advisory Group analyst Joe Feldman inquired, "Have you seen any differences in the consumables mix since the start of the quarter compared to what you had expected? What has been the performance of the discretionary business?" Rick Dreiling replied, "In the last earnings call, we highlighted a shift towards more consumer focus on needs-based purchases rather than wants. This shift has accelerated over the past 12 to 15 weeks due to changes in SNAP benefits, smaller tax returns and stimulus running out of the system. We believe this trend will continue for a while but won't get any worse." Rick Dreiling replied, "I think discretionary items are still important to our business, which is supported by the fact that we have a strong consumable side. We should not assume that our customers no longer need these items, it's just that they're buying more consumables." Jeff Davis replied, "In the fourth quarter of last year, Dollar Tree saw a 0% shift to consumables on a year-over-year basis, while Family Dollar saw 120 basis points. In the first quarter of this year, Dollar Tree saw 180 basis points and Family Dollar saw 200 basis points, indicating a significant year-over-year shift towards consumables. This shift has been reflected in the company's financials." Telsey Advisory Group analyst Joe Feldman inquired, "I appreciate the clarification and wish my colleagues luck for this quarter." UBS analyst Michael Lasser inquired, "Can Dollar Tree get into a cycle of greater consistency in the second half of this year? Is it realistic to expect Dollar Tree to earn $8 and $10 in 2024 and 2025, respectively, given the factors outlined today? Lastly, what is the incremental price point above $1.25 but below $3? Rick Dreiling replied, "Second part? I have overpromised and overdelivered throughout my career, and at my previous employer we began as a private company. During the upcoming Investor Day, I will present charts and graphs which show our journey to success. This has been a learning process with new discoveries every day that need to be fixed. I am confident in the 200,000 people I'm leading that we can do it in 4 weeks." Jeff Davis replied, "We are confident that we'll be able to deliver double-digit earnings per share, EPS, in the near future. To get there, we have already taken action and are starting to see some positive results from a top-line perspective. More details about our timeline and strategy will be revealed at Investor Day." Rick Dreiling replied, "I asked a question about multi-price." UBS analyst Michael Lasser inquired, "Have you tested price points between $1.25 and $5 for Dollar T Plus items?" Rick Dreiling replied, "I estimate that the SKU is currently worth between $1.25 and $5, without duplication." Deutsche Bank analyst Christina Katai inquired, "Have you seen any changes in the promotional environment, and how much can you lean on vendors to better source products if larger players increase their price investments? What steps can be taken to mitigate cyclical shrink?" Rick Dreiling replied, "Technology side. We are now executing on programs that we have made commitments to the vendors on, and those programs started in Q4 of last year and they are going to continue through 2019. Our promotional environment is very stable currently, with our Family Dollar banner experiencing vendor relationships not seen in a long time. This is due to our successful execution of commitments made to." Jeff Davis replied, "We have implemented a multifaceted approach to shrink, which includes defensive merchandising, introduction of new technologies, closer collaboration with local law enforcement, and increased focus on turnover. We may have to pass on the cost of higher shrink levels to the consumer through pricing." Rick Dreiling replied, "Christina, I am looking at ways to reduce shrinkage in our higher shrink stores by exploring whether the same assortment is needed as that of a low shrink category store. Additionally, I am examining all aspects of the situation to tackle." Randy Geiler replied, "I am grateful for your attendance today, and I look forward to seeing you at our investor conference on June 21st. Have a great day."